Welcome to the Female VC Lab podcast. I have Taylor here. Taylor, in one line, give me your name, your title, and the name of your fund.
Thank you. I'm Taylor Jean-Jacques. I am currently on the investment team at General Atlantic.
Awesome. What inspired you to become a venture capitalist or an investor?
What inspired me was I've always had a long time interest in technology and finance. Really started with technology. I was very into coding and starting in high school where I was building websites and apps, and fortunately went to high school that offered a lot of computer science classes. So I took all of them. And
that's awesome.
Yes. And also spent my summers in high school working with a startup, nonprofit that helps build digital library for students in developing countries. It's called nabu.org.
That's cool.
Yeah, so really got into technology in high school, and at the same time also started to have an interest in finance. I remember buying my first few stocks in high school as well. And so always had that interest early on. After high school, I ended up going to Princeton where I studied psychology, statistics, and machine learning. And there spent my summers at Facebook doing software engineering, which was a really great experience. Really great in terms of working on both the Android app, on advertising, and then also on Instagram, on the discovery page. And while I really enjoyed that, I realized I was more interested in thinking of the strategy and product versus actually building out the products and everything. Also, as I mentioned, had some interest in finance and investing, but hadn't explored it very seriously. Mm-hmm. And so then ended up going to internship at Fidelity, and eventually during my senior year of college, had a few investment banks reach out. And they said, here in our tech investment team, we work on all different kinds of deals with tech companies to basically help them grow. And we think this could be interesting for you. Mm-hmm. And so I ended up doing that full time. After graduating, I joined JP Morgan in their tech investment banking group, working on all different kinds of deals from IPOs, M&A, leveraged buyouts, again, with all different kinds of companies. Very cool. Yeah, that was very interesting. I thought I could be more helpful and really optimize the impact I could have with these companies by being an investor. And so that really led me to look at investment opportunities and led me to General Atlantic, where General Atlantic basically created the growth equity investing practice, which is partnering with really high growth, innovative companies and really working with them to help them grow. And so I felt that kind of mission really aligned with what I wanted to do and the impact I wanted to have. And so that's led me to where I am today.
That's wonderful. You talked a little bit about what you do. What is the thesis and the motivation behind the thesis over there?
Yeah, definitely. So here I focus mostly on consumer tech investing.
Okay.
And in my opinion, consumer tech investing is really about investing in the themes around how humans are fundamentally motivated and behave. For example, we are inherently social creatures. We crave connection with others. And so that's led to the rise of really large outcomes for social networks like Facebook or Snapchat or like dating apps like Bumble. It's really about investing behind those themes. And I think there are several different like sub verticals within consumer technology, but I think across all of them, it's really about leveraging technology and digitization to create access to the services we need and fuel how we behave.
Interesting. So could that include fintech? Does that include e-commerce? Talk a little bit about some of those sub-verticals.
Yeah, definitely. A lot of different sub-verticals, whether that's ed tech, creating access to technology. You have companies like Duolingo, Quizlet. Whether that's one sector I've been looking at is the real estate market. In particular, right now, we're seeing really high interest rates. Mortgage rates are like at 8%. It's like twice as expensive to buy a home today than it was 2 years ago.
3 times as expensive now.
Yeah, exactly.
Get it at zero, basically zero.
Yeah, exactly. And right now you're seeing kind of a consumer shift from buying to renting. And this has fueled a lot of innovation in the space where you're seeing platforms where you can like rent and then own or having co-ownerships of homes. And so I think a lot of the macro environment fuels how humans behave, what kind of innovative startups and technologies are really helping to basically solve problems for people.
That's really cool. What are you currently reading or learning or listening to these days?
Yeah, I was just reading, I just saw that Charlie Munger passed away just recently, an hour or so ago. And I know Charlie Munger and Warren Buffett are both two people I followed for a long time. I think Warren Buffett's A Letter to His Shareholders, something I particularly like to read. And they're both kind of more value investors versus growth oriented investors. But I think there's a lot that you can resonate in terms of like they always talk about having a long-term mindset and focusing on the fundamentals of the company performance and things like that. So I like reading Warren Buffett's Letters to Shareholders. I also liked reading a book by Ursula Burns called Where You Are Is Not Who You Are. And she really talks about basic rising through the ranks of corporate America and what it took. And I think that's something that's pretty relevant today. Those are some things I've been reading.
Very cool. Very cool. So the bonus question is here. Everyone gets it. In 2 years, when we're talking, how do you see venture capital and or investing having changed or evolved?
Yeah, that's an interesting question. I think, of course, venture capital, the whole economy has been in a bull run since the GFC, the financial crisis. And obviously, interest rates had previously been very low. Capital was flowing to a lot of companies. Cost of capital is really cheap for building businesses. And so a lot of maybe challenging business models survive for a lot longer than they would have if the macro environment was different. So I think moving forward, I think we'll see a lot of the more sustainable business models and sustainable companies really succeed. And I think capital will flow to those companies that are really having more of a unique impact with a moat.
That's interesting. Do you see like a shift in how capital in general is going to flow?
Yeah, I think in general we're seeing there are a lot of funds that do have a lot of dry powder. And also there are LPs that are somewhat overexposed, I think, to venture capital versus some other asset classes. And so I think it'll take a while for some of this to balance out. And so I think the next 2 years or so will be a bit challenging for venture capital. There might not be as many new funds starting or as many companies raising as larger rounds. But I think it's really good as far as creating more discipline in the industry.
How do people contact you?
You could contact me via email. My email is my first initial and then my last name at generalatlantic.com. I also am on Twitter. My handle is at Taylor the VC.
Awesome. Thank you so much, Taylor Jean-Jacques from General Atlantic, for being my guest on the Female VC Lab podcast.
Thank you very much.